The annual rate of inflation has come in for the month of March at 2.6%, according to the Office for National Statistics. Economists said that they were expecting 2.7%. Rachel Reeves, of course, is saying that it means that their plan for change is working. I'm not sure that everyone would agree with that. Let's see what Liam Halligan has to say about it, Telegraph columnist and expert on, of course, the economy that we are currently in. Liam, very good morning to you.
Good morning, Mike. Nice to be with you.
Yeah, good to see you. I'm not sure that Rachel Reeves' statement, I don't know if you've had a chance to read it in full, is entirely genuine. She says, inflation falling for 2 months in a row, wages growing faster than prices, and positive growth figures are encouraging signs that our plan for change is working. But there is more to be done. I mean, you could say that again, couldn't you?
You can indeed. Look, this is a temporary reprieve in inflation. We're still well above the 2% Bank of England target. Of course, as every talk radio listener and viewer knows, prices aren't coming down. They're just going up less quickly. Yeah. The Bank of England has a 2% target. We're at 2.6. The Bank of England itself, whatever the Chancellor says, acknowledges that by the end of this year, inflation is going to be 3.7%, so almost double the 2% target, the cost of living crisis increasing, and it will remain above 2% for all of next year too. Now, why is this happening, Mike? Why is this March figure down and why is it going to go up again? Well, this is a figure for March. We all know that in April, the energy price cap went up by 9% compared to last year. We know that in April, the minimum wage increase came in, which is going to massively increase firms' costs, as well as the increase in national insurance contributions. All those price pressures are going to feed through. So look, it's good news that inflation is down for now, but prices are still going up, as everyone knows, and there's a lot more inflation to come. That's the bottom line.
Well, that's the other thing. I mean, also council tax went up in April as well, which is going to affect an awful lot of people and what they're paying. And Frankie has sent me a tweet to say, you know, 2.6%, my ass, he actually says, I'm going to say. He says, my shopping was 20% more last week than it was at Christmas. And we've also seen a story this morning, people complaining about Southern Water, which is one of the many water companies who are putting their prices up. In some cases, 47% a rise in the water rates. I mean, it's unbelievable. I mean, that surely must have a knock-on effect at some point.
I think Frankie speaks for a lot of people. Look, I do think the Office for National Statistics has got a problem in the sense that increasingly the public don't believe the inflation figures. They don't believe that this headline index, which is it's called the Consumer Price Index, as you know, Mike, it's the index that the Bank of England targets. It includes a basket of goods and services that we all buy. Yeah. I don't think it nearly weighs heavily enough when it comes to utility bills, when it comes to energy prices, which have gone up hugely. Look, energy prices are like 40 or 50% higher than they were before lockdown. Everyone knows that. Food prices are 30% higher than they were before lockdown. And there seems to be no end in sight to these price rises. And when you have a situation where also you have things happening like shrinkflation, so, you know, we all know that certain chocolate bars are a lot smaller than they used to be, even though the price has gone up. Well, you're getting a lot less for your money. That's
packets of crisps as well.
People are talking in pubs about this stuff all the time. They come up to me and talk about it.
Well, that's right.
The fact that the inflation measure isn't really capturing what's really happening. And once you get that happening, Mike, you get an increase in what we call inflation expectations. People start pushing for much, much higher wage rises. Trade unions get a lot bolshier. Firms start building into their cost structures and their pricing going forward bigger price rises, because no one believes the inflation index. I think Frankie's right. I think this is a big problem.
Yeah, I think that's absolutely right. I mean, I opened a packet of crisps the other day. There was only about 10
crisps. You, Mike, looking so svelte.
I know. There was only about 10 crisps in it. I was going, what's going on? But I mean,
you have to have 4 rather than your normal 3 packets.
Exactly. Then. You really do. You have to buy the multi-pack now. But, you know, the thing is that that people are also, they're cleverer than the government gives them credit for. You know, Absolutely. They can see that everything costs more, you know, and you don't get as much for your money. And we know, for example, that UK average regular earnings growth decreased to 5.6% in the 3 months to February. So how the Chancellor can get away with saying wages are growing faster than prices, which is, I mean, I'm going to call it out. It's not true. It's a falsification. It's a distortion of the truth, or in other words, it's a lie.
Well, look, you've got headline wage figures. These are average, and statistically at least, headline wages are going up faster than prices for now, even though for many, many years, headline wage increases have lagged increases in the cost of living, not least increases in the price of housing, whether you're renting or trying to buy a house. And your audience will be nodding from the waist at this point. We all know how expensive housing has got across all parts of the country. It's not just a southeast thing. And I do think there's a sense where our living standards are just falling away.
Yeah.
And also another statistical issue that we have. God, you and me talking about statistics early on a Wednesday morning. Who'd have thunk it? But another issue is this thing, GDP, gross domestic product, the size of the economy. We all know that even though we have seen a bit of GDP growth in this country, that actually GDP per head, GDP per capita, as statisticians say, if I can keep my dentures in, has been falling. We've been in a GDP per head recession the last year and a half, Mike, with income per head, national wealth per head falling, because even though the economy's been growing a bit, the population, as we all know, has been growing much, much faster. So
Absolutely.
when the national statistics that we all rely on, and I think the public take a good deal of, they follow them closely, a lot closer than a lot of the media gives them credit for, with respect. When the national statistics aren't reflecting people's own thoughts and feelings and experiences, the public loses faith in the national statistics, policy making goes awry, and you get completely lost. I do think there's a danger of that.
And what happens if inflation does start to rise and the Bank of England starts to get a bit jittery and they then start putting interest rates up? Because while that might be good for savers, if anybody's got any money worth saving, it's not going to be good news for homeowners. The mortgages go up. They have even less money to spend on everyday goods.
Exactly right. Of course, in general, when inflation's coming down, when it's below target or near the target, the Bank of England may feel that you can lower interest rates in order to speed the economy up, make it easier to borrow, easier to invest money, maybe give mortgage holders a break if they're on variable rate interests deals. And when inflation's high and above target and rising, then the Bank of England may feel it has to raise rates to slow the economy down so we don't get more inflation. Look, we've seen 3 interest rate cuts from the Bank of England, right, since last summer, from 5.25 quarter point cuts all the way down to 4.5, where we currently are. I don't think there's going to be another interest rate cut. I've said that for a long time. Why? Because the Bank of England's own forecasts suggest that inflation is going up a lot over the coming months, starting next month in April, when those tax rises come in, when those energy price hikes for firms and households come in, as we were discussing earlier. They're saying it's going to go all the way up to 3.7%. And guess what? The Bank of England systematically underestimates future inflation. That's what we've seen for many, many years. Remember during lockdown, as we were coming out of lockdown, and Andrew Bailey kept saying, "Oh, don't worry, this high inflation, it's transitory, old boy." No, it wasn't transitory. It went on and on and on. It went all the way up to 11%, of course, and then we have multiple interest rate cuts, as some of us warned would happen. So I don't actually see another interest rate cut coming, and that will, of course, deter consumers, deter investors from trying to get our economy out of the kind of stagnation pit, near recession, that it currently is in. This is what happens when you award, massive increases in the minimum wage. Yeah. For 18 to 20-year-olds, the increase in the minimum wage was 17%, Mike. Now, I don't begrudge people a decent wage, but we're absolutely hammering businesses with taxes and mandatory wage rises at a time when businesses are still trying to recover from the madness of lockdown. Yeah. That's what's going on. Look at business sentiment. And of course, the economy isn't just about businesses and what businesses want. But unless businesses are thriving, none of the rest of us can thrive. Every single bit of money we have, every single bit of money the government takes off us and then spends, exists because a business created it and paid workers wages. And I think we are hammering businesses in this country, particularly small and medium-sized enterprises. And the more stagnation you get in business, the worse inflation gets, because firms have to put up their costs in order to survive. That's what we're seeing. Yeah, absolutely right. Great to talk to you, Liam. Thanks very much indeed. Liam Halligan, Telegraph columnist, a man who knows a thing or two about inflation and what's going on in our economy.